Wall Street ended Friday on a positive note as investors found their footing after Fed Chair Powell said the central bank is prepared to raise rates further at the annual J-Hole Economic Symposium. Although the Fed chief said inflation has come down from its peak, he also stated that prices remain too high, and this leaves the door open for further tightening. So, pucker up. Last year, stocks sold off hard during Powell's speech at J-Hole when he said the Fed would continue raising interest rates until the job is done. Since then, interest rates have risen an additional 300 basis points, with a Fed funds rate now at its highest level since 2001. And oh, does that bring back good memories. And so now we're going to go back to the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 439.97. Now, from recent looks at the daily chart, the price chart actually went down and pierced below the bottom channel line. It has not done that yet here in the weekly chart, so we're looking at the weekly. Again, the bottom channel line here, 2-year weekly. We're, say, more than halfway on our way down, and I think the odds are that we continue down a little bit further, and the greatest probability, in my opinion, is a bottoming and basing in this area here near that bottom channel line, perhaps below the 20 EMA, but above the 50 EMA. But let's look at the oscillators. They're a bit mixed. Here, into volume, looks fine, nothing wrong, but now we have the MAC. The rollover in the fast line has moved down and through the slow line here in red, and normally that's not a great sign, but we're still above that zero line. We have a lot of power still left in the charts, and the max near this 10 level. So I think perhaps it continues down in a shallow move below the slow line and bottoms and bases, and perhaps turns back up. This is probably the most negative of the oscillators. So let's go take a look at the others. First, here is the histogram, and I'm going to correct myself. This does look negative as well. The rollover and then the dive is relatively steep. But now comes the better news of the oscillators. Price rate of change, we have a trend line going all the way back here, and the trend line continues on up, more or less in that straight line. But we sawtooth around here, but nothing looks significantly negative. It doesn't look like it's going to drop through the floor. We're above zero, so we still have some strength, and the overall trend line seems to be intact. Again, the same trend line with the RSI seems to be intact, going all the way back here, moving up through like that. We're at the 50 or midline, so it's possible we could go below with another sawtooth or so, but I think the trend is intact. Same with the stochastics. The trend line doesn't go back as far, but it still looks pretty good in an upward fashion there. I think perhaps we'll come down here and hopefully bottom and base and reflect back on up above the 50 or midline. Same thing here with the Williams. You can see the upward trend moving on through like that. I think it'll come down here and perhaps turn up, maybe in the next week or two at the most, and up above that 50 or midline. At least that's what I'm hoping for. At least that's what I think the greatest probability is. Moving on up to the price chart, and one last look. So I think we're going to get down to this bottom trend line and move on up in the next week or two. And with the weekend coming up, I'm going to stick with my story because it's unlikely to change Saturday or Sunday. And for today, that's ChewDog Charts. Thank you.